In accounting cycle, we'll start with cash business transaction and then we prepare the journal entry with the help of accounting rule. With the help of accounting rule. Okay, we have debit credit rules for real account, personal account, nominal account. Applying that, we prepare the journal entry, we pass the journal entry, and then the grouping of accounts will be named as ledger posting. So first one is passing the journal entry. We use the term passing or journalizing. In this case, ledger preparation, posting. After the ledger preparation, we summarize that, which is called trial balance. The balances of ledger presented as a statement is called trial balance. Trial balance, is that okay? From the trial balance, we prepare the final accounts. Final accounts of three formats, three blocks, named as trading account, P&L account, and then balance sheet. Okay, whatever the balance you get in trading account is transferable to the P&L account as GP. Whatever the balance you get from preparing the P&L account named as net profit transferable to the balance sheet. This balance sheet is the opening journal entry for the next year. Okay, opening journal entry. After that, we add up some other transactions also in journal entry. That's how the process will go on. Each and every year later, this trading account and P&L accounts are going to be simply eliminated because we always start with the assets and liabilities applicable in this year. Assets and liabilities applicable in this year. And we of course have another route. That route is nothing but starting from CBT to directly preparing the ledger, which is called subsidiary books and journal proper. Practical system. This is called practical system where we prepare subsidiary books and pass the journal entries like, which is called journal proper, those things which could not be recorded in subsidiary books. This is called accounting cycle. Let me now brief the simple structure of final accounts here. Final accounts of three components, right? Three components or three parts. What are they? Let me explain those things here. So, trading and P&L account, for the first two blocks, this one and this one, we commonly name that as trading and profit loss account, right? Trading and profit and loss account. Okay. While naming may be common, but we prepare the trading account separately as well as profit and loss account separately. Okay. The first block in the trading and P&L account represents the trading account. Second block represents the profit and loss account. And then we will prepare the balance sheet. Balance sheet as on that date. Balance sheet. Balance sheet. Okay. In trading account, left hand side is debit or expense side. Right hand side is the credit or income side. When it comes for the balance sheet, your left hand side will be named as capital and liabilities, especially we call that as being liabilities. And in the case of right hand side, it will be named as assets. Okay. From the trial balance, I am going to post that to trading and P&L account. What are the items will be appearing in the trial balance? Let's see here. In trial balance, assume that, so these are the items are there. Okay. I'll assume these are the items available in trial balance. Right. Now in trial balance, okay, debit side and credit side. Is that okay? In the debit side, there will be expenses related to the trading account and expenses related to the profit and loss account, as well as income related to the trading account, income related to the profit and loss account, profit and loss account, expense, income related to profit and loss account. Clear? Apart from that, in the debit side, we have the assets also. We have the assets. And in the credit side, we have liabilities and capital. Liabilities and capital. So these are the items are appearing in general. Now, asset may not be single asset. It consists of various assets like plant and building, plant and machinery, whatever it may be. You have to identify that and post it. Identify and post. Similarly, liabilities may be sundry creditors, debentures, long-term debt, and all the things will be available in liabilities. And capital is a single amount, owner's fund. Right. Here, trading and P&L account. Trading and P&L account. Balance sheet. Balance sheet. Okay. Is not an account. This is not an account. Clear? This is not an account. It's only a summary. It's only a summary. What the company owes or owns. Owns will come in the asset side and owes comes in the liability side. Right. Trading and P&L account, debit and credit. So trading and P&L account, debit and credit we have. Now, why I tell you is very important. Okay. The expenses transferable to one account to another account. From expenses account to trading account, or from expenses account to P&L account. If you are transferring from one account to another account, we can transfer through a journal entry. The journal entry is named as transfer entry. The name of the entry being transfer entry. I am transferring this expenses account from the trial balance to trading account. How do I pass the transfer entry here? Just see that. I am going to pass the transfer entry here. Transfer entry. So for transferring expenses related to trading or related to the trading account to trading account. Okay. How do I pass? Expenses by default debit. Right. So always remember, in case of transfer entry, any account remains in the debit means it should be transferred to the another account during the transferring. While transferring, the debit gets cancelled by crediting, and then the new account where it is transferred should be debited. That's the logic. Here, expenses is a debit balance. Expenses is a debit balance. It should be now transferred. Expenses should be transferred. As it is being the debit, it should be transferred means it should be credited. And where it should go? It should go to the trading account. So there it should be debited. Trading account should be debited. Right. So listen here. This is debit balance. To cancel the debit balance, I simply credit it to expenses related to the expenses to be posted in the trading account. And we have to debit what? Trading account. We have to debit trading account. Is that clear? Hope you could understand. For your better understanding, I'll just give the assumed numbers also here. Assumed number. Trading account expenses being 1000, profit and loss 500, income 2000 rupees, profit and loss income 200 rupees, liabilities 1800 rupees, and capital 6000 rupees. So the overall total being 10,000 rupees. Am I right? Here also we have 10,000 rupees, and asset should be 8,500. So assume that this is the summary of trial balance. My first duty is to transfer the expenses related to the trading account from the trial balance to trading account. As the expenses are always debit, to transfer that debit item should be credited. So the expenses being the debit, it is credited. And it should go to the trading account. No, the account where it is transferred should be now debited here. So here the journal entry being 1000 and 1000. 1000 and 1000. Such a way we can pass the entry for this. And what about this entry? Expenses to P&L account. Expenses related to the P&L account will be transferable from the expenses to P&L account. Further, the journal entry being, okay, expenses of P&L account to P&L account. As expenses being debit, to transfer this debit should be what? We have to cancel it by crediting it. Okay, so two expenses, this value being 500, and it should be now debited to profit and loss account. Is that okay? Hope so you could understand. Similarly, the income, this one, okay, income related to the trading account is transferable to the trading account. Remember, income should always be credit balance, right? To cancel, it should be now debited. So this income, okay, I am going to debit it. So income related to the trading account is debited. Income related to the trading account debited to trading account. Is that okay? The value being 2000 rupees. And this is 500. Okay. Then finally, income related to the P&L account also being transferred to P&L account. So income related to the profit and loss is transferable to the profit and loss account. So the entry being, as income is always a credit balance, so here is also credit balance. So it should be now debited. So the income should be debited now to income related to the P&L account will be credited, the value being 200 rupees. And we have to debit that credit, no, so you have to cancel, sorry. This is credit balance. Credit balance means you have to cancel it by debiting it. So I am debiting that income related to the P&L account. And to what? Crediting the P&L account, the value being 200. Remember, by posting this expenses trading, that account is eliminated. Expenses P&L account got eliminated. Income trading got eliminated. Income P&L account got eliminated. And what are the leftover journal entries we have, or accounts we have? So this one right here, I'll just put the tick mark here. Expenses related to trading and expenses related to the P&L account. So the leftover thing being this trading account, am I right? That trading account will go to the trading account, which side? Two expenses. Isn't it? The value being 1000. And here in the second entry, the leftover item is P&L account. In P&L account, two expenses. The value being 500. And here, trading account in the credit side, no, then by income in trading account by income, the value being 2000 rupees. And here in P&L account by income related to the P&L account, the value being 200. Now we have completed this. See, in trial balance we have posted all these items, and these items are still left over, right? The leftover will be posted in the same side. Asset, I am going to write it down as a list of assets available. It is not transferring. It's only writing down the things available in the assets in the asset side. So the assets here being, so we don't pass the transfer entry here because it's not an account to transfer. So transfer entry means it should be transferred from one account to the another account. It's an asset only. You just write it down all the assets as a statement. So in the asset side, I'm going to write it down all the assets as a statement. So here the asset being 8,500. Similarly, in the liability side, usually we'll start with capital. The capital here being 6,000 and liabilities 1,800. So only a statement, we don't pass the journal entry here, writing down the statement. As already told you, by preparing the final accounts, we have the trial balance as a base. From the trial balance, we prepare the final accounts. After preparing the final accounts, there we have three components: trading and P&L account and balance sheet. Tally one after one. If you tally the trading account, whatever the balance will get, which is named as gross profit. This is called gross profit. Is that okay? That gross profit is now transferable to where? P&L account. Okay. For this, of course, we need to pass the transfer entry, because trading account is a separate, second half is a P&L account. Now the GP is transferred from which account to which account? From trading account to P&L account. Whenever we are transferring from one account to another account, we need to pass the entry. Come on, pass the entry for transferring the GP. GP of trading account transferred to P&L account, right? So the entry being P&L account debit, P&L account to. So what's the entry? P&L account debited or credited? Debit. Yes, GP is left with what? Credit balance. Isn't it? Profit is a credit balance. As it is being the credit balance, that should be now transferred, means it should be debited. So GP account is debited. GP account debited to P&L account. So by passing this entry, we can transfer the GP of trading account to profit and loss account. Is that okay? Similarly, finally, I am going to tally the P&L account. 1,200. We get 700 rupees as the balancing figure, named as net profit. Okay, what we do with the net profit? Again, it's a statement. It's only balance. We are not going to transfer that. It's going to be posted only in the either asset side or liability side. Is the company responsible for paying this 1,000 rupees or 700 rupees to the owner or not? Yes, whatever the leftover amount is there, company is liable to pay it to the owner. This is for the owner's risk-taking ability offered one. So the net profit is nothing but the amount of benefits given to the owner for the risk taken by him. So I am going to credit here 700 rupees net profit. By default, this will be addable with the capital. It should be addable because who is the reason for the entire business and also responsible for any results. If it is a negative, he is the bearer, and in the case of positive, he will be also taking the advantage over that. So if you tally this, the total being 8,500. From this, we are sure the balance sheet gets tallied. In the next year, now what we do? This balance sheet is the starting point. This balance sheet is the starting point. I told you, will be starting point every year. Every year, what we do? We simply cancel all these things because so much of things will have no any importance the next year because all these things are expired. Okay, rent paid, you enjoyed the possession. Salary paid, you enjoy the service of the employee, and you purchase and sold the goods also. No more the goods now available for subsequent year sale. So all these things are expired. The expired thing will have no role in the future. Skip over all these things. So finally we have to pass the journal entry for the balance sheet in the next year. By passing the entry, we are going to simply debit all the assets and credit the liabilities and capital. That's how we can pass the entry. Let me pass the entry here. Asset account debit. Asset by default, asset is a debit balance. No, so I'm going to write that in the debit side only. And liabilities, two liabilities. So assets being 8,500, liabilities being 1,800, and balance being the owner's fund capital. How much is the owner's fund? 6,700. The profit is also added with the owner's fund. Sir, can I pass the entry for adding the net profit with the capital account? Of course, you can add that also by passing the entry. Net profit being the credit balance, right? So to transfer the net profit to owner's fund, the net profit account is debited and the owner's fund, capital account, can be credited. That way also you can pass, let me pass that here for your better understanding. Okay, profit and loss account debit, profit and loss account debit to owner's capital, the value being 700. By passing this entry, what happens? We have clubbed the capital to the owner's fund. So I have now explained how the trial balance is going to be transferred or recorded as a statement in the balance sheet. Transferred to the trading and P&L account or recorded as a statement in the balance sheet. Balance sheet is a statement, it's not an account. And trading and P&L account, both are accounts. Two accounts are there, but commonly named in the overall itself, trading and P&L account. But the first block of the trading account and P&L account, trading and P&L account represents the trading account. Second half will be the P&L account. In trial balance, it's your duty to find out whether the expenses related to the trading or P&L account. Similarly, income related to the trading or P&L account. Leaving that, any assets and any liabilities are there, no, that should also be identified. Okay, which is nothing but what is that? A company owing to outsiders or owning for settlement of these liabilities by the company will be named as assets and liabilities and capital. That will be not transferred, written as it is in the balance sheet, right? So transfer entry also there. Okay, and then just writing down is a statement is also there. Transfer entry of the four varieties. Okay, one is related to the trading expenses, another one is related to the P&L expenses, another one is related to the trading income, another one is for trading P&L account. Trading P&L means expenses for the P&L account. Apart from that, GP is also transferred to the P&L account and P&L account is transferred to the capital account. That entry should also be understandable. And finally, the closing balance sheet becomes the opening balance sheet in the next period. Opening journal entry for the next period. For that, this is named as opening journal entry. Opening journal entry. The method of passing the opening journal entry is very simple. All the assets debited, all the liabilities are, and the owner's fund is credited. Right. So we have seen transfer entries. This is transfer entry. This is opening entry. This is opening entry. Is that okay? The transfer entry sometimes will be named as closing entries also because we are closing the accounts. Hereafter, we don't have any expenses to be carried over the subsequent period. Subsequent period, we incur additional new expenses only going to be recorded. Right? Make a note of it. Then I will explain what are the things will come in the trading account. What are the account items will come in the P&L account. Right? So we will be grouping that. Finish up copying this.